You're listening to Retail Soundbites.
Hello, everyone, and welcome to the Kantar Retail Soundbites podcast for the week of February 2nd. I'm Barry Thomas, our senior global thought leader, serving clients on global commerce, marketing, and future commerce tense topics. Thank you so much for tuning in, and joining us on every podcast is my pod partner, Rachel Dalton.
Hi, everyone. I'm Rachel Dalton, head of Retail Insights for the Americas here at Kantar. Our podcast is intended to share knowledge and insights on both North America and international retail and restaurant verticals. We kick off each podcast with a news and notes section to share innovative and impactful stories from the past 2 weeks. And then we introduce our Kantar experts or guest speakers to share insights on critical topics in commerce today. And today we are very pleased to welcome Brian Choi, Managing Partner and CEO of the Food Institute. But first, back over to you, Barry, to officially kick us off with our news and notes.
Glad to do it. Brian is awesome. So glad to have him on today. And a little bit about the weekend. Rachel, I just came back from Jacksonville, Florida. I'm pleased to report the weather. This is when we all need to be in Florida. I mean, Rachel,
Yes.
It's like, it's 65 degrees. It's sunny. All the Canadian license plates, all the Midwest, so many from the Northeast. I mean, you don't want to be down there in the summer, but now is the time, Rachel. So it was just beautiful. You would have liked it. Then secondly, I was learning how to drive a boat or
Yes. Very exciting. That's
Rachel,
a whole new challenge, Barry.
Yes, and I will say I'm a little better at that than Leslie. Even she stated that. But there's no brakes on a boat, Rachel.
Oh, I didn't know that, actually.
Yes.
Interesting. Okay.
You just kind of go forward, neutral, reverse. So there's a lot of neutral going on.
Interesting.
And parking it is kind of hard. The last thing to mention is we got together with like 8 of our friends down in Jacksonville. We saw Yacht Rock, the big Yacht Rock group, who's out of Atlanta. And Rachel was so funny. I felt so young because I would say the audience, I have never seen so many 70-year-olds, 80-year-olds singing Brandy like that. I mean, we were all like, hey, like we're kind of young here. This is good. So there you go.
Well, that sounds like a blast. Yeah, I remember a number of years back, I went to a conference in Florida. It was smack in the middle of February. It was so cold here. And I was like almost crying when I got off the plane. I was so happy for warmth and sun. But I mean, I do love the snow. It is beautiful and I enjoy it in the winter. But it's been a very cold one this year. So I'm kind of looking forward to when it breaks and we have some warm, at least above freezing temperatures. That would be good.
Gosh, yes.
But yeah, we had a great weekend. Due to the extremely cold temperatures, my middle son's ski club was postponed on Friday night. So we had kind of a more relaxing weekend, but we had a couple tennis tournaments. My oldest and my middle both play now in USTA tournaments, one in New York this weekend, one in New Jersey. So my husband and I divided and conquered on those. And it was very fun. And then we did a little local basketball game. So we're close to Fairfield University, Quinnipiac University. So we did that with the kids, which was a blast, and did like a little wings after a little family dinner kind of thing. So it was like a very chill kind of weekend, which was great.
God, Rachel, I've said this before, but when people say, well, what are you jealous of? I'm jealous of people like Rachel with the kids. I mean, that's so much fun going to the tennis match, cheering them on, and then heading over to basketball, et cetera. I mean, those are some of the very best memories. I just love your updates.
Thank you.
All right, Rachel. Well, let's get off to news and notes, 6-pack of news and notes. I'm going to start it off with probably a story that, for me at least on LinkedIn, is the most ever forwarded on story I think I've ever posted on LinkedIn. I think I had, maybe 15 forwards on this post.
Wow.
I mean, whoa! Like I was looking at it, like, what am I doing good here? So it's less about me, but Reuters did a phenomenal job of just talking about Walmart's pharmacy. I mean, Walmart pharmacy is such a driver for traffic and value, and their latest, pay move is kind of just speaking to their scale and talent advantage. They're boosting pay for pharmacy technicians. I mean, these are the people that are really doing much of the work. With earning up to $40 to $42 an hour. And the new team lead roles are averaging nearly $30 an hour. So by comparison, if you look at, pharmacy tech pay at CVS and Walgreens, that's kind of closer to, around 16 to maybe $18 an hour. So it's more than a wage story. It's a growth and scale story as healthcare comes to retail, as we know. Talent is a strategy, and Walmart's just using that scale to raise the bar. And I do want to give a little shout out. We have this new GLP-1 study that we're constantly refreshing waves that leads. And guess what is the number one pharmacy that is driving switching, with shopping? It's Walmart. When GLP users go on GLP-1, the number one retailer they generally switch to just because of the drugs and everything around that's bundled to them is Walmart, Rachel. I mean, they are just killing it with their pharmacy.
Yeah, I mean, and that's the place to win is healthcare, as we know in the US. Like there are the big players, Walmart and Amazon are looking to really disrupt because it needs disruption. And that's a real strategic play. There's, we have labor shortages across the country, especially in healthcare. So if you can keep really great, pharmacy technicians and healthcare employees in your ecosystem, that's a huge kind of winning strategy there. So definitely very smart move. And, Amazon, of course, is doing a lot behind their healthcare initiatives as well. So huge opportunities for retailers. So Barry, my first piece of news is on a Business Insider, and it's about the TikTok announcement. Finally the deal has closed to sell part of TikTok's U.S. assets to a group of investors. So ByteDance, which is TikTok's parent company, will retain just under 20% shares, like 19.9% share of the company. But the deal is basically a joint venture made up of three main investors that will each own 15% of the stake in TikTok. That's Oracle, that's the private equity firm Silver Lake, and it's the investment firm MGX, which is based out of Abu Dhabi. And then the rest of the company, about 35.1% share, will be owned by a consortium of investors. And there's some individuals like Michael Dell's family investments are owning shares as well. But basically, the whole point of this joint venture is to secure U.S. user data, bring trust, more safety. They're looking at content moderation and things like that. ByteDance will still be involved with TikTok Shop, with all of the advertising and marketing, which is great. But then it does enable the goal of the U.S. government was, again, protecting U.S. users. And it looks like that has happened. So pretty exciting move forward.
TikTok Shop, Rachel, is just so important. I mean, generally, that's a top 5 e-commerce growth chain, let's just call it. I've seen different numbers, over $20 billion last year. I can name right now 10 CPGs that have a team now calling on TikTok Shop. Mm-hmm. Think about that. What? Yeah.
Right.
Kind of becoming a real chain. Now, I did hear just last week, there's a bit of disruption happening with how they're managing the supply chain, and they're kind of moving, brands to their own supply chain solution. That is causing some issues, but gosh, I mean, social commerce, we talked about it forever, right? Rachel, about China. Well, it's kind of here now, right?
Yes, definitely. It's become huge. And we know the social space and building communities is kind of where it's at. Especially for discovery, for brand discovery. So exciting news.
Well, I'm going to keep it on the theme, Rachel, of China coming in from Tencent. This is a Pan Daily. If you ever wanted to just know what's happening in Asia and China, Pan Daily is fantastic. So this is about Tencent, and they're testing what's called, and I'm sure I'm pronouncing this not correctly, Rachel, a Yan Bao party, which is signaling a push into AI-powered social networking. And so this is where they have the AI, let's just call it agent, into the social space that blends group interaction with AI participation, signaling its latest bet on social AI. Now, see, we're not seeing that so much in the States, but as usual, China's way ahead of it, Rachel, right? So unlike traditional chatbots that focus on one-to-one conversations, which we're all familiar with, Tencent is using a multi sort of user social space to do all this with. Within this environment, basically, this social AI can actively participate in your group chats. It will help, right, Rachel? It helps set the mood, whatever that means. We'll scared to ask about that.
Like a party planner, or
or more. Yes, and execute tasks. It can function as a smart assistant for your group chat. Let's say with a shared family space. It can set reminders for the group to do certain activities. It can help organize group challenges. It can read data and help you with group fitness check-ins and help coordinate activities. I mean, social AI, Rachel, just like social commerce in China, maybe that's what's next over here. What do you think?
Yeah, I mean, really interesting. It's sort of the perfect blend, right, of that tech, AI, and humans like wanting to interact socially in a community and pulling them together. Super interesting. That's probably on the horizon for us as well, but that's very interesting.
Pretty cool.
Yeah, very cool. Okay, so for me, next out of the Wall Street Journal is the announcement on Amazon, of which there have been a bunch of announcements lately. But this one is with regards to groceries. So the announcement about 2 weeks ago now, maybe, is that it's closing 15 of its Amazon Go stores, which is all of the Amazon Go stores, and 57 Amazon Fresh stores, and basically refocusing its grocery strategy on same-day delivery, which are really leaning into on Amazon.com, but also expanding Whole Foods markets. There are plans to open stores and continue to expand Whole Foods. And Amazon basically cited it really wasn't able to create like a scalable, differentiated model with these stores. But they will convert some of the fresh stores to Whole Foods. They're really going to lean into same-day delivery, which I think is really their big bet, because we know Amazon is an expert in fulfillment. And so they can really leverage their fulfillment network to be almost like it's brick and mortar and be able to deliver something to you almost as quickly as you can run out to the brick and mortar to get it. I mean, that's kind of, I think, where it's at with Amazon, and that's where they're really leaning hard. Right now, same day delivery serves about 2,300 US cities and towns, but they're certainly going to expand and offer more opportunities for people to get groceries and general merchandise together in one basket. And then, of course, another announcement was that big box brick and mortar, that it's doing a test and learn around in the Chicago market, like a 230,000 square foot big box store that will sell everything: groceries, general merchandise, like fresh prepared foods, etc. So not sure what will happen. I mean, Amazon is always testing and learning and trying to figure out where they can break in and grow. So we'll see there. But for grocery, for sure, they're further ahead with the integration plan. And it sounds like they're really going to be leaning in heavily with Whole Foods and same day delivery going forward.
Love this story, Rachel. What's your quick take? I mean, to me, like, hey, this isn't failure. Amazon, is competing more and more with Walmart, based on, stores as a fulfillment center. I think they just learned a lot. And what are they going to do? Well, they're going to, double down on e-commerce, which you said, which makes sense. And then who knows what happens with this new concept? I mean, what do you think?
Well, I think where Amazon plays and where Amazon's point of difference is its technology platform, and then the fulfillment network that has built out to compete with, like, the Postal Service in the U.S. and UPS and FedEx. They're at that level. So that's where they can compete against Walmart. They can compete against Walmart. Yes, they don't have the physical brick and mortar, but they have the distribution network, which can mimic that and create that opportunity for it. Can you imagine getting anything you want within an hour to your doorstep? That's probably less time than it will take to drive and park, pick something up, and drive home. So they're not there yet on every product, but that, I believe, is their vision in the long term, is to be able to get there and be able to compete in grocery in the way that they can compete.
Wow. Well, you must cover e-commerce for someone.
I must. I do. I do. I do. I cover e-commerce. So it's a fun topic. Amazon
you know. All right, my last story, I think, is kind of a fun story. I mean, I just find the topic fascinating. This came out of just me studying what was happening at the World Economic Forum with Davos, like, kind of, what's happening over there and what's happening with kind of what's next for AI. And I kind of wrote a blog on this, which is about why brands and retailers must plan now for the day after AGI. AGI, artificial general intelligence, that kind of refers to systems, AI systems that are capable of performing so many cognitive tasks at or beyond human levels, including learning across domains, reasoning, planning, and acting autonomously, which are very different than those narrow AI tools we often have today. So, these systems are expected to operate as agents. They'll set goals, coordinate workflows, execute decisions. We're already seeing this now with some agents. And so at Davos, they just said, look, the consensus, was kind of clear. This is coming anywhere within the next, arguably 2 to 5 years. And it may not be a day like, hey, it's January 9th, AGI is here. It may be quiet as it's approaching. And in some cases, it's kind of maybe already here. And so you do want to have some of your organization thinking about this. Like, who are the people in the organization that are leading my future back initiatives, where we're thinking, 5 years out or 3 years out, certainly. And, because of that, I kind of outlined 4 preparation areas that we're kind of learning about. And one of those is just, AI is definitely shifting, AGI especially, from insight to execution. That's a central theme, coming in. And so these AGI, they'll inform decisions and then execute them. And so what you can do now as just a leader is you just want to be piloting agent augmented workflows now, like this second, across media, across e-commerce, across forecasting, and kind of think of it as a new operating model. And that's going to help you build muscles for AGI. And by the way, there's some companies, Rachel, like seriously, there's some companies hiring for AGI right now. In fact, I showed this to some people at a big presentation. They were kind of like, whoa, yeah, Google kind of hiring, kind of preparing for this, kind of leading this. So I don't know what you think, but it's kind of important.
It's very important. It's a complete transformation and shift to all business models across CPG, across retail, across really all businesses entirely. So yes, I mean, I think it should be a much larger portion of a company's time spent on that future back planning than maybe that is even in place today, in my opinion, because it's so transformative and will really change everything, break business models, change people's roles in companies, et cetera. So it's just a hugely important topic.
They're not going to automate us, Rachel. Not yet.
No, not yet. All right, last piece of news and notes out of the New York Times, Barry. This caught my eye because I was in one of these Waymo cars. I don't know if you've ever gone into a Waymo car. It's a self-driving car. It's owned by Alphabet, Google's parent company. And this particular article talked about how it raised $16 billion to expand globally, and that it plans to begin testing with a safety driver in more than 20 cities this year. And the article also talked about Waymo, that it more than tripled the number of rides it delivered last year to 15 million. It started back in 2020 in Phoenix, which is where I actually took a couple of Waymo drives when I was out there for a conference last year with one of my colleagues. And wow, was it amazing. But they've since expanded to San Francisco, Atlanta, Los Angeles, Miami, Austin, Texas. And it will continue to expand services here in the US. For example, it's looking at longer highway drives. And then it's looking at launching globally, as I said, in London and Tokyo are 2 of the cities that were cited in the article. So it's very cool. You hail Waymo like a cab, but there's no driver. It's all technology, and you put in your location in the app and it drops you off at your location and you call it back to pick you up. It's wild. It was such a cool experience to try.
Rachel, we're seeing them all over Atlanta. I was in an Uber the other day, heading to the airport, and I was with the Uber. I said, "What do you think?" And he's like, "There's just more and more of them." Now, some of them, at least in Atlanta, they still have the human driver. Some they don't. I mean, for you, like, how are you feeling? Were you nervous?
I was nervous.
Like, oh my gosh.
That's why. Yes, a little bit, especially especially when you make a left or there's a stoplight, is it really going to stop? But it did, and it was very cool. I took videos of my experience. I had no driver in mind. It was just so wild. The future of transport, right, and delivery is kind of here. So it's interesting.
It is. I was listening to a futurist, and he was saying, probably my grandchildren, hopefully I'll meet them one day. Our grandchildren will probably look at parking lots one day and just think, what were they thinking? Why would you park cars? Like, why did you do that?
Parks itself. Like, why are you learning to do that? Yeah. All right, Barry. Well, I'm very excited to have Brian Choi join us today. Brian is the managing partner and CEO of the Food Institute, which is the leading source for food industry news, data, and market trends. Brian is an experienced financial executive in the food industry, having previously worked in investment banking, consulting, and private equity. Brian serves as a strategic advisor to multiple food and beverage organizations, and he's also recognized as a leading food industry expert and thought leader, and has appeared on international media networks such as the Wall Street Journal, Bloomberg, CNBC, and the BBC. Brian, so excited to see you again, and welcome to our podcast.
Yeah, great. And thanks for having me. I'm super excited about today's discussion.
Well, Brian, I just want to ask you, where are you calling from? Rachel's up there where it's freezing. There's like feet of snow. Here in Atlanta, we don't have that.
Well, I'm in northern New Jersey, so we did get
Okay.
hit with quite a bit of snow. I think about 16 inches.
Yeah.
So we were snowed in for pretty much a couple of days. I have two kids; they loved it. They didn't have to go to
Yeah.
school.
We got a snow day right out of it.
Yeah, but glad it's been been cleared out, and we can finally take our car outside and drive again. So
Yeah.
Wow, man.
Yeah. Well, we had the groundhog, yesterday, Groundhog Day,
Mhm.
and it, we, of course, no surprise, have 6 more weeks of winter. So I wasn't too surprised about that. The ice is just not going away.
Yeah, hopefully it'll warm up soon.
Yeah.
We did have snow in Atlanta. I just want to give a shout out to snow here in Atlanta over the weekend. It was not 16 feet, maybe 16 inches. So.
Awesome.
All right. Well, Brian, I just wanted to kick us off and just talk about 2026. And when you look at your outlook going forward this year, what is the single macro signal that CPG and retail leaders are still underestimating? And why does it matter now rather than later?
Yeah, no, that's such a great question. I'm a data guy. When I did investment banking, private, I'm always looking at numbers, and the data always points to where the truth is, right? And so it's one thing. Being a media company, I see what a lot of the other media platforms, what they're saying. There's a lot of optimism, which I think is great. It's always great to be optimistic. But the one data point, I'm hyper focused on where the consumer is. And this is something that we've spoken to you guys about, just looking at, how the consumer is feeling about their own financial situation and how they're feeling about, their prospects of the US economy over the next 6 to 12 months. And, it's pretty low, right? If you look at a long-term perspective, like I remember, back when I was working, in my Wall Street days and private equity days, it was normal to see the University of Michigan consumer confidence around 100 consistently on a month-to-month basis. Today, that's around 50, right? And if you look at the long-term perspective of consumer confidence over multi-decades, whenever the consumer confidence was consistently around the 50 range, it usually signaled depressed growth, and I think that is the one thing. It's, the US economy is 2/3 of the consumer. And so I think the one thing that a lot of food and beverage companies are overlooking is how financially strapped the consumer is. Even in today's, was reading the headlines, Pepsi, planning on cutting their price on Lay's and Doritos potato chips by 15%, because volume growth, there's not, and consumers have been complaining about prices. Like that's a pretty big step that, one of the largest CPG companies, what the concerns that they have around the state of the consumer, right? So that's the one thing I think it'd be really good to just focus on where the consumer is, and then for food and beverage companies to kind of strategize around where the consumer is, right? Whether it's, going more the value route, maybe it's more about, maybe it's a cost adjustment, or really delivering that perceived value, right? I think that's the one thing, which, I know we'll be talking about later in the podcast. But yeah, consumers are value obsessed. If there's one word or two words that I would say in 2026, the consumer is value obsessed.
No question about it, Brian. So let's build on that for a moment. We at Kantar, we're talking a lot about the bifurcation of America, the K-shaped economy,
Yes.
and how brands need to think and act differently. We have like chapters and playbooks on that. And I think it's especially important with Gen Z. I mean, Gen Z's purchasing power versus like me, Gen X, is about 1/3 less. They just have, so subsequently the addressable market of a lot of CPG categories is just less, but we still want them to grow units. So kind of what are you kind of seeing and sharing over there to food and beverage brands on this, like such a hot topic?
Yeah. So, as it relates to Gen Z, they, what's really interesting when you look at the behavior patterns of what is influencing behavior, and we all know that, I have 2 kids. They are spending a lot of time, kind of ashamed to admit this, they're on devices, right? So they're influenced by media, by social media. Our kids are, they're still obsessed with K-pop demon hunters, right? So a lot, they're influenced by media. And so particularly around Gen Z, what really moves the needle is connecting with that demographic in the mediums in which they spend a lot of their time, right? They're not really necessarily like, with my parents, they're very focused on price, right? They're going to Costco, they're going to Sam's Club, and price is the main determinant factor. But with the Gen Z demographic, they are very much influenced by their influencers by which they follow, right? And so for them, the calculus on purchasing behavior is not just about price. Yes, price is important, but they need to feel connected with the product, whether it's a food product, whether it's a beverage product, whether it's a food service, establishment. They need to feel connected in a deeper way than purely like a price or value criteria. So, it's very interesting. If you go even further down, the Gen Alpha, they're even more influenced, by that. So every demographic is different. The strategy has to be very different for each of the demographic cohorts, and it's challenging, right? It's like you have 3, 4, 5 different consumer groups. You need to have a very specific strategy to target each of those demographics depending on their consumer need states. So, but yeah, it's with food and beverage always rises to the challenge, and I'm sure companies will be able to adapt quite quickly in 2026.
Maybe just one build, Brian, one bright spot that we see, especially from the CAGNY presentations last year where all the CPGs present down in Orlando, premiumization, man, I mean, like that upper income consumer is driving, 60% of the economy. There was a lot of positivity there. We'll be back again this year covering that, but I that is a bright spot.
Yes, so I agree with you. They're continuing to spend, but I would say, and this is something that I haven't really seen a lot of media attention on, they are being also more influenced by value. Value for them is a different definition, right? For middle America, lower income consumers, they're extremely price conscious, but even that upper echelon of the consumer, they are also more and more being influenced by value. So when you look at Walmart, for example, when you look at Costco, they're one of the fastest growing consumer demographics is that upper income consumer. 5-10 years ago, they weren't shopping at Walmart. They weren't really shopping at Costco, right? But now we're seeing even that demographic finding, I would say, perceived value, right? If you can buy a higher end wine at a Costco at 20% discount, that moves, that causes behavioral change. So, if I were to, I would say 2024 was about value consciousness. 2025 and going into 2026, that term I used it earlier, value obsession. We're seeing value and specifically perceived value driving all consumer demographics, right now. Now, the top 1%, obviously they're not, they're doing whatever, right? They have, so one other point I wanted to make about this the top end of the consumer range, a lot of their wealth is tied up in the stock market. Mm-hmm. We are near all-time highs. S&P 500 just crossed, I think, 7,000 this morning, right? When you look at the bond market, its yields are down. So my point is, asset prices are priced to perfection right now, and we are coming on one of the longest bull market in U.S. history, if not the longest. So why do I bring that up? If there's any sort of volatility that starts to creep up in the markets, we might see asset prices go down, right? And so if I'm not saying I'm not predicting a crash in the markets, but if asset prices in the stock market, goes down, the psychology of that end of the consumer will be even more impacted, right? And so that's a one thing I would definitely keep an eye on. Look at the value of the stock market. Look at the value of the bond market. Look at even real estate prices. Like if we start to see that shift down a little bit, it's going to cause a huge change in behavior amongst that kind of top end of the consumer. Yeah, it'll be an interesting year. It'll be, I think the right strategy or the prudent strategy, prepare for the worst, but be optimistic, be optimistic but be much more agile, right? And I think we're starting to see some shifts in the market right now, even at this early stage in 2026.
Brian, I want to talk a little bit about 2026, because you've also used the term, it's the year of the challenger brand.
Yeah.
And can we talk a little bit about challenger brands and what they are doing structurally better than incumbent brands right now?
Yeah, that's a great question. Yeah, I was with our mutual friend Sunny Kamkar at the Winter Fancy Fair show, and we were delivering a presentation on the macro trends in 2026. And we led with that this year being the challenger brands. So challenger brands are companies that are generally a lot smaller than the big incumbent brands. They're very agile in terms of shifting and pivoting depending on where the consumer is. They're usually much more savvy with marketing, digital media, understanding like who their target demographic is. And fourth, they are connecting with their consumer in a deeper way. So what we're finding here at the Institute is that consumers are getting a little tired of the same old, right? And a lot of the big incumbents have not been innovating at the pace that the consumer is changing. Barry, you and I have spoken about this, on previous podcasts. So the innovation cycle, where the consumer is, they're looking for it's almost like they're looking for something new at a faster pace than their parents or in the older generations. They want new flavors. They want a lot more variety, and what the market is offering right now in terms of big incumbent, it's not satisfying their insatiable desire for change, for innovation, for new flavors, for excitement, right? The challenger brands are offering that. They're offering products, and I bring up, like, for example, Goodles, right? And the better for you mac and cheese brand, right? How many decades has Kraft mac and cheese really dominated that segment of the market, right? And it was comfort food, and I sometimes consume that as well. But if there's a better brand that it's healthier, it's better quality, ingredients, offers more flavor innovation, that's causing me as a consumer and the consumer at large to be like, hey, like, I'd rather be paying a little bit more, but for a product that is not only better for me, but it also adds a little bit more flavor innovation, right? So they're just one example. Another is Simple Mills. They got bought up by Flowers Food last year. A better for you cracker, right? And really they connected with their target demographic. Families, especially female like that, females that are in families, and they want to feed their kids a better for you snack. Like these are the challenger brands that are out competing the big incumbents, right? And so the consumer is ready for change. is my point. And challenger brands are, I think, rising to the occasion, and they're delivering a better perceived value. And I said perceived, right? So because consumers are willing to pay a little bit more if it offers a differentiated experience. That's what challenger brands are doing right now, and it's exciting. And that's one of the exciting things I see in the food and beverage industry today.
I agree. I mean, last year Bain put out a really good study about 1% of revenues coming from challenger brands in this country, but at least 40% of the growth. Like, whoa, what's happening? And I find it just shocking. I mean, shocking that modern soda was not invented by the two juggernauts. I mean, I'm still kind of wrapping my head around that, Brian. I don't know.
Yeah.
No, I absolutely. And a lot of it was like, it's a culmination of things, right? It's not just one thing that's I think because the big incumbents have just been so profitable for so many years and so many decades. They're like, hey, why do we need to change the formula? But the consumer, as we've seen, really since COVID, I would say the COVID was a defining moment, for consumers, where it was like, yeah, they're like, wow, what am I doing? What am I doing with my life? How am I feeding my family? I want to be, feeling better. I want to be eating healthier. I want to be drinking less alcohol. So that really was like I think a key moment that consumers were really thinking about. Hey, they want to change. They want to change for the better, right? Then you have, even with the new administration, the focus on the whole MAHA movement, right? And it's that's also, I know we're going to be talking about that later with the new food pyramid, but that's also causing significant change in the way products are manufactured, in the way food service establishments, like shifting out seed oils and with beef tallow. Like, we're seeing more and more of that, and consumers want that. It's interesting. Like, I was looking at one commercial, and a food service establishment, they were promoting, hey, we have specifically beef tallow fries, right? And so they're using it because it's moving the consumer. Consumers are curious. They're like, hey, maybe not only does it taste better for them, but maybe it's kind of aligning with the new food pyramid, right? And it's a quote better for you, type of product. So it's a culmination of factors, right? That's really kind of driving this change and bringing it to the forefront.
No question. Just one last build on that, and then Rachel, let's get you in here for a question. I just don't think it's being publicized enough. I mean, the new food pyramid, government policy is following that. I don't think enough people are talking about that. For example, SNAP, which kind of matters in the FMCG world.
Absolutely.
I tell you, it matters for beverages. SNAP now in at least 20 states, big ones like Florida, Texas, they're basically telling you soda and other products are hazardous for your health.
Yes.
And you cannot buy them. That's never happened in the history of this country before. And I just that's a bit wild to think about. So I just think the food pyramid, some people are just kind of like, oh yeah, hold on a minute. Like, it's influencing financial flow. So anyway, Rachel, I just wanted to mention that.
Yeah. I'd love to build on that and talk a little bit more about the new food pyramid. And maybe we can talk a bit to Brian, where do you think the real friction point will be for large CPGs trying to respond to this?
Yeah, it's a complex question. Every company has a different strategy. I would say that the companies and the leadership of these companies that are more aligned with with Trump and RFK, they've been more like leading the change. I think there are other food and beverage companies that are less aligned, and they're thinking, okay, maybe they're looking at sort of like the midterm elections, right? Like with a potential shift to the Democratic side, and what that will mean in terms of like how aggressive, a new administration, if that were to come to pass, would be on implementation, or sort of like encouraging kind of more shifts in towards that kind of the new food pyramid. So I think there's some math happening, like within boardrooms, on that. The other, I think the one point that I wanted to make is that this whole new food pyramid has been highly politicized, both from the right and the left. When you look at the core components of the old food pyramid versus the new food pyramid, the majority is pretty consistent, right? So, I think it's important for consumers and for food and beverage companies to recognize that there's a lot more similarity than differences within the food pyramid, right? It's still a around 2,000 calorie diet. It's still emphasizing real food, right? Real protein. It's emphasizing less ultra processed foods, limiting alcohol, eating fruits and vegetables, like 2 to 4 servings or 3 to 5 servings. So there's a lot more similarity. Now, where there is some contention or disagreements, for those that are on the left, they don't believe that a red meat diet, and a full fat diet is something that is consistent with a quote healthy diet. And this is from the American Heart Association and other independent organizations as well. They lean more towards kind of plant protein, the use of seed oils rather than beef tallow. Again, it's a difference in philosophy, and also interpreting the actual data and the scientific evidence, right? So that is one. A second one is, Barry, you mentioned this. They're hyper focused on ultra processed foods under the new food pyramid, right? And so they're making the claim that ultra processed foods, it's detrimental to your health, and they're making the link to chronic disease. Like they're making a strong connection to chronic diseases, right? So would I classify all processed foods as bad? No, right? But there is perception that under the new guidelines, they're putting all processed foods in sort of like a quote bad category, right? And so, which I don't think is fair, right? So that's also a point of contention. But yeah, no, I think it's more about politics. A lot of the rhetoric around media is more about politics and what's actually real. And again, just emphasizing, hey, there's a lot more similarities, than differences. One other point I forgot to mention is that under the new food pyramid, there's less emphasis on whole grains, right? So if you remember the old food pyramid, you had the base was like whole grains, whether it was 5 to 7 servings, I forgot the number. They're now say, hey, reduce that and eat more protein, or real food, right? That's also like a shift as well. So it's interesting how they inverted under the new food pyramid. They inverted the pyramid, right? I think it was a statement, but again, I emphasize, hey, there's a lot more similarities than differences between the old and the new pyramid. So,
but totally interesting. That's a really interesting point. Just there are more similarities than differences, which I think is a really, really unique point. But the other thing too is the new food pyramid is also in line with kind of the wave of shoppers and consumers we see that are focused on their health and their wellness, which is a big focal point. As you said too, Brian, like challenger brands, so much of what they're winning on is transparency of ingredients and new unique ingredients, and many of them are have a healthier sort of wellness profile, and so there's a lot converging there, I think.
It'll be interesting to see, and I have yet to see data, for companies like Pepsi, They came up with their new naked chips, right?
Yeah.
So taking out the food dyes and keeping the packaging more less kind of flashy with kind of it'll be interesting because let's be honest, like between even under the old, like the previous administration and this administration, a lot of consumers they didn't really most Americans didn't really follow the food pyramid. Right. So
it probably wasn't. It's not a top of mind thing in your day.
Yeah, it's great. It's great to talk about at the beginning of the year, people making New Year's resolutions and whatever. But consumer behavior rarely changes dramatically from year to year or administration to administration. So, but with the changes in the formulation of products like a Doritos chip, I'm wondering, I'm waiting to see what the actual results are, right? Consumers are, especially kind of the young demographic, they're moved by colors, right? They're moved by packaging, like flashy packaging. And so I'm wondering if it's I don't think this point is really talked about a lot, within companies or like in media. Just a small shift in the color from like the Doritos hot nacho chips. If it's a plain chip, it might seem like a small change, but when you have like a 10-year-old or an 8-year-old and they see two different, like, they don't, they're moved by that. They like those colors, right? And the taste, they're used to the taste of, of these ingredients that are perceived as being unhealthy. So we'll see. It's a big deal. I think this is going to be a bigger deal than most companies and executives they think it will have. But we'll see. I don't know if you guys have any opinion on that.
Yeah, I mean, it's a transition time. I think that the key for any big CPG is really to be very, very in tune with their consumer and follow their consumer. Yeah. So if they're following their consumer and they're seeing shifts and with AI and the ability to like pinpoint down to that individual person, I think it's just going to be a real strategic, game to be able to ensure they're servicing all of their consumers at all different levels of kind of that wellness journey and generations, as you pointed out too, Brian. So.
Yeah, absolutely. And Barry, you were on a webinar previously, on the Food Institute, talking about the whole alcohol industry, right? Mm-hmm. Like, what a huge shift! This is not like a fad. This is a generational shift in consumption of alcohol, and that the young demographics, they are not drinking. They're shying away from the products that the parents and grandparents they consumed. And so it's a big change, and we'll see how this ultimately where it ultimately shakes out. But companies really need to be hyper focused on who their consumer is and being able to adapt products and the messaging and the communication to those target demographics.
Brian, I wanted to just finish us off in our conversation. And, when you connect like health evolution, value, pressure, flavor globalization, what does a winning food or beverage product actually look like in 2026?
That's a great question. I think it's a strategy of, you can't have the one size fits all, right? I don't, there's no one product. Like I would say in broad strokes, you're looking for a food and beverage product that is better for you. Again, like that's a very loose term, right? But I think that's going to be a key sort of focus. That should be a key focus for food and beverage. It's going to be one of perceived value. So that for some consumers that might be a lower price point. For another, it might be adding a little bit more than what is currently out there in the marketplace. So whether it's a health component, maybe it's a different type of flavor or global flavors. And I would say 3, like, consumers want experience, right? Like, they're tired of the same old, right? And when I look at companies like let's even shift to the kind of food service side. When you look at what Kava's doing, they are disrupting that, and it's not cheap. They have a higher price point than a Chipotle, right? Mm-hmm. But they're offering new flavors. They're offering better for you sort of ingredients, and yeah, their innovation pipeline is just amazing. Like, they're coming up with new flavors, like LTOs, all the time. And so it's being able to, innovate at the pace of where your consumer is. And that might mean different things depending on the target demographic, but consumers want innovation. They want to experience that in what they're eating and drinking. So I would say those in very broad strokes are, the winning formula for food and beverage companies in 2026.
Well, Brian, this has been a great conversation. I'm really happy to have had you on today, and thanks so much for joining us.
Yeah, thanks for having me.
Thank you, Brian.
It was great chatting with you guys. Yeah, thank you.
All right, Barry. Well, really insightful discussion with Brian. I was so happy to have him on. I know we were recently part of the Food Institute's webinars and podcast opportunities, so it's great to collaborate with them for sure. So here for our audience is our top 5. Number 1, we talked about the consumer outlook and the value mindset that we're seeing as we move further into 2026. And Brian was talking about weak consumer confidence, and he believes it remains underappreciated by CPG and retail leaders. We talked about the University of Michigan Confidence Index hovering near 50 versus the historical norm of 100. Consumers are under financial pressure, increasingly value obsessed, is what Brian said. And value now means either lower prices, but also it could mean quality that justifies the cost. So we always talk about that at Kantar. It's always value beyond price, and that's certainly continuing into 2026. And we talked a little bit about PepsiCo's price cuts on Lay's chips and snacks, really reflecting the reality that we're in. Number 2, we talked a bit about demographic differences between Gen Z, Gen Alpha, and older shoppers. Consumer behavior is increasingly fragmented by age. Gen Z has roughly 1/3 less purchasing power than Gen X, but remains highly influential, particularly driven by social media and the kind of that creator community and the importance of brand authenticity beyond just price. So that's where the value is for that generation. And then older consumers prioritize savings through channels like Costco, Sam's Club. And then you have your younger consumers like my sons, Gen Alpha. They're more digitally native, reinforcing the need for just sharply differentiated strategies by cohort rather than broad one-size-fits-all marketing. And number 3, we talked about premiumization meets value. So upper income consumers still account for somewhere around 60% of spend, but even this group is redefining value and the importance of what value means to them. High income shoppers are increasingly turning to Walmart and also Costco for premium items at perceived deals, like discounted high-end wines was one of the examples that we talked about. However, spending power is closely tied to asset markets in this asset economy we're in, leaving premium demand vulnerable to volatility in those markets. So brands targeting premium consumers must stay agile and prepare for continued shifts.
Number 4 that Brian talked about, he talked about this year, 2026, as the year of the challenger brand. I mean, I thought the last 3 years were the challenger brand years, but he really believes that based on everything they're seeing, more of the same this year. They're going to continue to outpace incumbents, move faster, innovate more boldly, more daring, and connecting maybe better and more authentically on digital and social channels. And certainly his Goodles example is a fantastic one as you think about kind of, Kraft and mac and cheese and what's happening there. And so many of those challenger brands, they're just preferred by Yuka. And that, that app is really changing. It's certainly changing how people shop. And so I just thought that was a good reminder that this momentum with challenger brands continues. And then number 6, just kind of, or I should say number 5, just kind of rounding up here, is he talked about, dietary guidelines, policy, We discuss, the new food pyramid and how, who wins here is kind of real food, cooking at home, which is sort of, preferred with that narrative, protein, fruits and vegetables, and, definitely reducing the consumer interest in ultra processed foods and sugar, and then how that's relating to government strategy. Now we have SNAP, which, for example, is banning soft drink consumption, even like, zero flavored soft drinks because of the artificial ingredients, which is a real sea change in very big states. And so it's a new day, if you will, for modern health, the food pyramid, and customers want change. They definitely want healthier. They want new flavors. They want global inspiration and visible innovation, especially around better for you. So plenty going on in food and beverages, and certainly they do a great job covering it.
Well, awesome, Barry. Well, that does bring us to the end of this episode. Thank you to Brian from the Food Institute for joining our discussion. We hope you enjoyed our show. And as always, thanks for listening to the Kantar Retail Soundbites podcast.
And we'd love for you to rate and review us on wherever you're listening. That would be fantastic. You can always reach out to Rachel and I on LinkedIn, and especially want to thank Victoria for producing and marketing our podcast and really just making it happen. So thank you, everyone, and we'll see you in 2 weeks.